investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 12th of May, almost the middle of May. Amazing. And we've got a huge move up. Dow's up over 1,000 points, 1,007 at 42,257. Leg E. Is this an instant restart? I think it's an E, and I think we're getting a little bit overbought. Only in the sense that the on-balance volume has pushed quite a bit higher, and it is pulling back just a little bit. But the question came in, a couple of people, where would you start looking at this as being a short-term top? Well, let's go through this very slowly. First of all, in these conditions, imagine being short on Friday with nothing that you can do. Let's just imagine that you couldn't do anything until the market opened on Monday. Wow. I mean, you're talking about a huge move just basically overnight, even though it's a weekend, against you. So, boy, it's tough. I'll talk about it as we move along. So the Dow is up 1,000 points. The S&P, SPX, and we are along the Dow. And all I can say is that trying my very best, it's been very difficult to try to shut out all the noise and just look at the chart and discuss it. In fact, let me do this because it's the beginning of the week. We've got plenty of time. We've got the whole week. Let's just go through this logically. So I had the left side, right side price time match, not in the plumb line being at the low from the high that I was looking at, coming down X number of bars and then same number of bars going up back to that level. I had to move it. And because once it isn't a mathematical formula, I have a particular technique. Now, you can call it skill, you could call it luck, you could call it art, you could call it anything you want, but I have a particular technique. And when I chose using that technique to see where there would be a midpoint to go from one of the highs on the left side to one of the highs on the right side, I had said, and I discuss this with my subscribers every week, Friday afternoon, or maybe Saturday morning, usually it's Friday, I do my, straight after the market closes, I do an hour, maybe an hour. It's like a webinar because I do it in such great detail on what I'm looking at the market, what's working, what's not working, and what we're looking at. And then I use techniques like this little green line right here that says that is the Chapman wave. I'm just looking in the Tiger YouTube. Yeah, you can see it pretty nicely. That's the Chapman wave inside wedge target repellent line. And of course, we were here on Friday. Let me go there. That's where we were. So it looked like, are you nuts? You're in the 41,200s and you're looking at that high. Well, the measured move, that's what it was suggesting, that it was a possibility. Well, today's high turns out to be 42,345, less than 40 points away from that left side high. That was the high of the 2nd of April. Well, I still have another one, 42,821, and that says using the same technique, except I had to look for a different plumb line, the line in the middle, because it wasn't the low. It's the low of the 7th of April at 36,661. What do? I use the same technique, except because there's a longer time frame from the high that was made back in 26th of March at 42,821 in the Dow. It extends out and it goes to where? It goes to the 19th. Well, wait a minute. 19th is Monday a week, a long time to go. Anything can happen. All right? And we've got, look at this leg B in the weekly chart where the 9-period moving average was so far under the 14, getting closer but still far. But look at the MACD, the histogram's improving. So the weekly chart is really starting to strengthen. And look at the stochastic, only 51% on balance volume. Nothing's overbought here. In fact, not even overbought. I'm only now getting a buy signal, which says that I can say, I haven't got a buy mode, but a buy signal says, yep, things are improving a lot. That's the weekly chart. Monthly chart is still looking great. It hasn't taken out the left side high of that 42,821 level yet. I have to wait. Is that the number that I'm looking at? No, I don't think it is. I think the number I'm looking at right here is the 42,343.05 level. Very close, very good. And that would be a gray A. I don't want to spend time on that. I'll go through that over the week. Let's go through the S&P. Same thing. So I'm going to go to the SPY because that's the one that I actually did quite a bit of work on. And the SPY said that by the 13th of May, we should be testing the high that was made on the 25th of March at 576.41. Well, we just broke it. Left side, right side price time match to this particular candle right here. So that was the plumb line. It had to be moved. But look, we went to a D. Finally, we've got to a D. You know, when you get to D in the Chapman wave methodology, you have to do, and that's the easy part, getting from peak A to B to see if you get an upgrade. It says you should go to a D. Then the work starts and it says, okay, what now? Is there going to be an instant restart within 3 bars? Suddenly you've got a restart, and all of a sudden you've got yourself having a parallel account, an alternate count, E/A, F/B, etc. Well, we don't have to go there. All I can say is that the technicals are still strong. Look at the stochastic. After all of this, and everyone's talking about shorting, and I'm saying, wait a minute, look, the stochastic's flat at 89%. That's what you want to see when you are positive. And this is positive. So the question came in, what about the SPXS? When would you go short? So I'm going to put this together. Look at this Eiffel Tower straight up to the 1067 level on April the 7th. And then we exited the next day, I believe it was, our short positions. And we've been only long in different positions. And look what happens. It goes under to a lower low. Now, this is going to be interesting because look at the chart. It looks a little bit like what? It looks a little bit like the VIX index, right? Very similar. 7th of April goes to 60.17, tariffs wars, and boom, it comes down. And now it's gone. I mentioned on Friday that if it goes to the 200-period moving average or 20.43, the volatility index, or under it, that's when we have to start looking at the potential for some kind of a bounce in the alternate, the inverse of the long position. That's the short positions. And now I'm starting to look at it. But all I can say is, do you want to put yourself... You remember gold, it used to be with gold that you just didn't want to short gold because you never knew overnight what would happen on the weekend, some geopolitical thing. Gold goes shooting up and you're short. So at this particular point, I kind of feel the same way on the long side, on the short side for the general market, which we're only long. I'm saying, now not everything's worked out. For instance, I thought that we had a really good buy in Chewy, CHWY. And it was a good buy because we got in down here and it rocketed. I had this left side, right side price time match to 40.09. And on Friday, where does it go to? It goes to 39.94. And I said today, let's take a little bit off at the open. So you got about a 5% gain on the tad that we took off. But we got stopped out. And here it is back at 38.23. Is this going to pull the kind of a Robin Hood one on us here? No, all I can say is I liked it, but I still had to have a stop in place. And all the technicals, I'll talk about it because this is a lesson that I think we can all use. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So I would have expected that the chin gauge would have been down at 0.30 or 0.25 or something like that today. But no, it didn't do that. In fact, look at this. It had a higher, it went to $1.82 or something like that. And the low so far is still $1. You can never tell with markets just exactly how things pan out until you look back and say, oh, that's what was going on. Okay. So as it stands right now, I'm talking about Chewy. This is Chewy Inc., online retailer of pet food and products. And the lesson that I learned with this one, I didn't expect it. Actually, I said to subscribers, we will find out if this is in the sweet spot in terms of not for the pets, but a sweet spot in terms of the market, because it might be that we have a big spike to the upside and only the stuff that's really related to tariffs, etc., really zoom to the upside because there's that relief. Well, maybe that's true, but everything about this was positive, and I probably should have said, you know what, take a little bit off, that's the stop, but we're going to make the stop much lower down instead of less than 2 points, actually, on a $38 stock, because it's looking good. And I've done that in some areas, and it's worked really well. I thought I didn't need to do it here because I wasn't expecting. Look, it came down to 36.35 after trading almost at closing in the 39s on Friday, and now it's back to 38.09, just down $1.47. But that's the way it is, and I needed today to see if this is the way the market's going to work. The stuff that's right in the sweet spot just as a soaring move to the upside, and then on any pullback holds and then tomorrow goes higher. We'll find out whether that's going to be the case or whether this is just a one-off. This says, okay, great. Now show me. I want to see the deal. I want to see exactly what's going on. And we still don't know. CHWY. CFO is to step down after next earnings report. Thank you, Zip. Okay, because he or she's done a very good job so far, at least from the 14.69 high to be trading the 37s. But anyway, it's on my list, and to make a 5% gain on just over 5 and a small little bit, and then take your call and take a 4% loss, it's not a big deal, but it is a big deal to me because there was nothing technically wrong, and I thought I'd given it room, and I don't know why. Anyway, it's got this double top at 40.09, and now you've got the next top, that's in January of 2025, and now you've got this potential for next top of 30 just under 40. There's your double top that I'm always looking at. But the technicals so far holding really well. Stochastics at 87%. MACD is good. Relative strength did pull back today, but it's still pretty good. 9's over the 14. What a pity. All right, that's that. Now let's go on because we want to look at, I did that. I just wanted to look at gold. I want to show you something interesting. So gold, talking about the double top, look at this. Gold has so far made a double bottom, and that makes the next 3 sessions. It'll have to be 3 sessions. So that takes us into Thursday. Very important. Why? Because I don't like to type in the price in the continuous contracts because it gets smoothed out, and that's the wrong price in the end. But at the moment, the high is 3509.9 on the 22nd of April. And then it makes a much lower high on the 7th of May at 3448.2. But wait a minute. The low that was made on the 1st of May was 3209.4. Today's low is 3211.2. So there's a potential H pattern that could say, gold is still important, and we have the geopolitical situation, but we don't know yet whether or not things are going to pan out that way. You've got Ukraine and Russia. You've got Israel, and you've got Gaza. You've got India and Pakistan, which a little temporary halt there. You've got a lot going on. So I think that gold is still kind of in play. But what I mentioned before is that it seemed to me, even though we got out of our dollar after 7 years, I just said we need the money for something else because this is going to be a market that is going to use up resources if you want to get the best benefit. And I didn't think that locking it in for more time, even though I said I think that we're making some kind of a trading low in the dollar. Now you can see. So we got out in the 99s. We were in at 90, ran it up, taking little bits off all the way to 120 and then down again, and then back to the September 2022 high of 114.78 and came all the way back and took out the left side low. And that just says you've got 2 bars, maybe 3, and the monthly chart to close nicely above that previous low, and that's the low of in 2023. What was the price? That was in July of 99.58. All right, so we went down to 97.90, was it? 97.92. That was in April, and now we're trading at 101.57, up $1.23. So that's something. Look at this. You've got 200-period moving average of 102.47, and it crosses the the black 14-period exponential moving average. You've just touched today the pink 9-period moving average in the weekly chart. There's a lot to go to over this particular period in terms of seeing whether or not EUR, USD, that's the yen. That's the euro, has gone from a peak D, dreaded H once, dreaded H twice, and now it's even lower. And what are we talking about? We're talking about, peak D in the euro, peak D in the euro daily, peak D in the Chapman wave methodology, where other things can happen. In the weekly chart, the sell mode in the daily, not even a sell signal yet in the weekly, and a peak D under the previous high in the monthly chart. Going to watch this very closely in USD JPY. This is the yen. Look at this. Big leg D to the upside. Nice. So that's at 148.26, up 2.9. So what we're looking at here is that the target would be just another 20 cents or so, and then the target could be 149.71, which is the 200-period exponential moving average. It missed it before. This one, I think, is going to take it out. So that's the euro. And there's your dreaded H, successful so far in the monthly chart. 138 double bottom. Look, let's just go to that. Look, 139. So 139.58 in September of 2024, and last month was 139.88. So just a tad higher. So far, a successful H pattern. That means it could rally, and it could rally to the 151 area, and then we'll see 151, 152, strong resistance. Okay, now let's get going with this. So all I want you to do is, I meant to do this earlier to see if on a daily basis, so have a look at this. So the E-mini is up 146.50. If it takes out, in this move that's pulling back here, it takes out the low of 10 minutes to 10 at 58.19. If it goes to 58.17, watch out. The 200-period moving average of 57.97 becomes, no, it has to go lower. 58.14, and that means 57.97.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Folks, we're looking at, the question came up, could I look at Integrated Resources Corporation? So I thought, resources, that should be very interesting in this environment. What are we going to do with resources? Wait a minute. Resources, turns out that it's a staffing service for healthcare, life sciences, manufacturing, IT, helps organizations find and attract and retain talent. Global Staffing Solutions Company. So, and that's the area. So it's in the more the healthcare, life sciences, manufacturing, and IT. And also it's payroll solutions and nearshore staffing support. So that's quite a bit. So I'm looking at that and I say, okay, that's different to the resources that I was looking at, like the mineral type resources. It's trading down 13 cents. I didn't even look at the price at $1.59. So it's gone to a peak D. Now, okay, so I would have looked at this and said it failed to go a little extra to the upside last week in the weekly chart. And if it went to look, I wasn't even looking at price, but I would have said if it had gone to just another maybe 3% higher, then I could say the 2.11, the 200-period moving would be the target. I didn't realize it was at $2. Okay, so this is at $1.60. So this is a tough one in the sense that if you've done your homework, and this is a company that you followed, and that ITRG, okay, the planned SMR 25. SMR license applications expected by 2029, plus 6 other takeaway. The planned SMR units are likely to be up at about 200 MR size. Okay. Yeah, so this is a work in progress. Let's just put it that way. So I would do this because it's had a beautiful monthly this is a stock that was much, much higher once upon a time. Then it comes all the way down to the most recent low of about 80 cents. Well, it's worked its way higher. In other words, it's doubled. Look, there's a peak A and a B and a C, and it's gone to a leg D in the monthly chart. So something's going on in this company that I would say to you, if it was, instead of $1.59, if it was $15.90, I'd say, hey, this is improving a lot. If it was $150, I'd say, I think that it's going to turn around and try for the 200-period moving average. But at this particular point, it's made a lower low than all of the last 2-3 weeks, even though it went to a peak D at around about $1.95. So if you've done your homework and you like it, what I would do is I put money. It's pulled back quite sharply from the high of just 4 sessions ago. And my fear here is that if it takes out $1, it's $1.59. If it takes out $1.48, which is the, let me just say that I think it has to be this low right here. The low of the 14th, it's testing now. That was at $1.53. Yeah, I have to go back to the middle of that bar right there. So if it takes out $1.46 on a closing basis, I think it's kind of done because it's a leg D and it could be a peak D in the weekly chart and it's a leg D in the monthly. So all I would say to you is this. If you're in it, that's one thing. If you're in it and you're in it much lower, let me just see if you've said anything here. Okay. No, you haven't. Okay. So if you were in it in the $1.10, $1.20 area, I'd say, you know what? I'd keep that position. I would, on a certain percentage of that, I would say if it takes out that 148, 146 level, I definitely take something off. As it stands right now, you've had a really good gain to $1.59. It was $1.90. I mean, there's a big difference between 59 and 95. I would say if you're in it, take a little bit off and prepare to put that back. But it's a work in progress, and therefore it has to, for this arch formation, having taken out, now I can draw in a trend line. Let's see if that trend line is going to work. This trend line goes from there to there, and I'm taking the outer wicks, and then I'm going to draw in another trend line parallel, And there's your Chapman Wave inside track propellant zone. It just touched it on the downside today, right? The low today has been $1.54, and it's trading right now at $1.59. That's good. But what you need to see is that it gets back. It fills the gap from today, and it gets back above the doji candle of Friday. So you can actually go to, it doesn't have to close, but it needs to tag 176. And it needs to do it within the next 2 days. If it can't do that, it's going to pull back. So you can see what I'm saying, that it's done its job. It's taking a peak D rest in the daily and maybe the weekly and the monthly. So I'm just going to recommend that if you got it lower down, I'd try to keep that position as long as I can. Take it a little bit off, and I'd try to add that back at a certain point. I'd either add it back on a pullback, or if it can, I know it sounds like you're buying higher, but I would prefer to take something off and then add it back either at $1.77, or have a little patience and see if it can hold. Right, it depends. It's a declining trend line. 140. I'm going to go back to the 147, 146 area. If we can hold $1.46, $1.47, and then bounce off that, then I would put that back. So what am I saying? It's done its job to the upside. It's taking a breather. The breather it's different to the market altogether. It's got a different chart pattern, but it is saying that the weekly chart, a lot of strength in the weekly chart, and I like that. So I'm not saying anything other than it's at 146, 147 that has to hold, because if it pulls back, then that could be one of those peak Ds where you just come straight down, have a breather, and then you start another move up. So it's a work in progress. This is going to gain in a few days. I'm going to make a note of it. ITRG. Okay, that's for jambalaya in the den. Next one was TTD. Yeah, am I correct? Yeah, TTD. This is the trade desk, TTD. There we go. Nice spike to the upside today. It's been doing that since Wednesday. I drew in this cup formation because there's one that I was thinking of adding for subscribers. We followed it for ages. I don't know if we've ever had it. But there it is, a big spike up. It's gone to 78.24, up 17.17. See the 200-period moving average, how it just went right through it on the downside? You want to see the same thing on the upside. So the 200-period moving average in the weekly chart is at 76.09. It's called a 76. You want to see this by Wednesday, tagging the 82, somewhere around 82. Today's high so far, 78.88. Really nice. I've got this as a leg E, and so we've got to be a little careful, but it is acting very well. It's improving the weekly and the monthly. Looks horrible. Just straight down from the 140 level down to the 42s. Ugh. And now it's bounced very nicely to 78, almost double from the low. And so that's TTD. I'll do a little bit more when we return. And then the question was, could I look at coin? So 3 coins in a fountain. Here we go, COIN. Peak C. It's not doing very much today. It's up. Oh, no, it is. 840.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So we're back, and we were looking at these. So I looked at TTD, and the most important thing right now is that you've raised the base of support, because remember, gap up, and then if you go above the gap bar high the following session, doesn't matter whether it's a 1-minute bar or a weekly or a daily, that's important. It means that if it closes above the high of Friday, which was at 75.77, and it's trading at 78.99 today with a low of 75.07, which just tucked in a little bit under the high of Friday, not the close. That close was in the low 70 area. It means that there's a good chance that as long as you can hold above 73.30 over the next 2 sessions, it should go a little higher. But the way that the on-balance volume has screened to the upside, the stochastics at 90%, that's wonderful. The MACD is still expanding, that's great. 9 period over the 14 is just terrific. But just on a very short basis, maybe even an intraday basis, that on-balance volume says, be careful, because there could be a pullback. And I would say that pullback would be about 50% of the move that we've seen. Just this bar from 75.07 to 79, so that makes it 75. You're at 78, so yeah, that's the same sort of thing. 75 to 74 is your key intraday support over the next 2 days. I'll be watching that. Next question is, so dude, I don't know, so you mentioned SMR in the same breath as Jambalai's question on that integrated resources. And that's trade. That SMR is new scale power core. So I don't know what the relationship is, but it's acting quite well. It's gone peak A. That's also an A, but that's peak B, C, D. It's gone to an E, and it's at 17.94, up 49 cents. I would just say this one on a weekly basis looks like it's getting close to some resistance, and it could be trading between $19.53 on the upside and 18.40 or 18.35 on the downside. Could go into that range over the next week. I'm just looking at it and I'm saying that's kind of what my eye sees at this particular point, even though the technicals are good. The stochastics dipped to 75%. So I'm just watching it closely. Next question came in. Yeah. So that was coin. Oh, didn't I do a coin? Oh, that's when the break came. Coin is going to try for a leg D, maybe a leg C if it can go above 213.60 is the high today. 214.13 was the high on Friday, but I drew this in and I said buy using my left side, right side price time match. I said by the 14th. That's by Wednesday. There should be an attempt to get to this area right here with this candle. The high of the candle on the 7th of March was 222.05, and then the next one on the left side is 226.60. All I can say is that it's acting well, Coinbase Global Inc., but it's not, look at this, it's got nothing to do with, look at the Bitcoin. I mean, look at that. Down, it's up 90 cents, down from the high of 106,270 today. In leg E, this is a gray A in the weekly chart. It broke above the Chapman Wave Inside Track repellent zone, so it's acting very well. But I think it's on a very short-term basis that on-balance volume is saying it just needs a little bit of a pullback. So 100.25 to 99. 100.25 to 98.80. That's the area that I'd be looking at as key support just on the very short term, but it's acting extremely well. We're still long I bit. Look at that. Up at 58.68. We're long from 39.15. It's doing very nicely. Okay. Next thing we want to look at question was SOUN, the sound systems. It's got, what is it called? SoundHound, AI Inc., voice recognition tech. Went to a peak D at around about 25 back in November, whoosh, or December, came tumbling down to the 5-something area. Hey, wait a minute. Let me just get this on the daily chart. Okay, peak A, B by a penny. Let me just double check. Look at that. A is $8.34, $8.35. 8.87. 8.85. Yep, that's peak A, that's peak B, C, double top C, and then it goes to a D. All right, so many of these are going to Ds right now. I have to tell you that just based on my notational work, I'm anticipating that we're about to bump into resistance. That's a question I'll deal with as soon as we get back for the final break. Where do I see resistance and how can it come about? Well, if I said to you on Friday there could be some kind of a deal, first of all, I'm sure most of us would have thought, okay, it's a deal. I don't know how good the deal is. We have to wait for the details. And then all of a sudden you get this, and the Dow's up 1,000 points. And the S&P is up 150. I mean, these are not small numbers. I think that it's going to just be bad news that just tanks the market in 1 second. It'll just suddenly slide 400, 500, start sliding, and then it'll be about 400, 500, 600, 700 points down. But to get, look at this, today's low in sound, SOUN, the low today is 952. It's trading at $11.05. So when these big moves occur, it means you've raised the base. Now you've used the 200-period moving average as a spike to the upside, as a propellant. So SoundHound, Inc., AI, I like it on the very short term. It's got resistance, and you want to know resistance. Resistance would be right here at $11.60. 66 cents from the 3rd of March, and then it goes to the $11.92, the 19th of Feb, and then it's got this huge gap. And what I like to do with gaps is I do this. I draw it in, I grab from a trade station, I grab the rectangle, I go to the outer limits right there, I drag it across, and I say, okay, let's do a price time match, and we'll go to the low. Does it work? I don't know. We'll find out. And I click on, and I go clickety-click, and I do that, and I get another one. And that goes to the right. I don't know if it's going to go enough to the right. No, it can't. So this is not the one that would work. So this is pink. Okay. So it's got a long way to go. I would even put it, since I'm 1, 2, 3, 4, 5 bars short, I don't want to change my bars to the right. Add another 5 bars, and that takes you to the end of the month. So it has until the end of the month to try to get to at least into the start of the move above $11.92. Now, I don't know why it gapped down, and I don't know why it's taken so long. I like it when it immediately moves back up and says, oh, that was a mistake. And now I'm moving up. I'm done with that. This doesn't say it. It says it's a work in progress, but a fabulous move today. So, yes, it's working higher. And all I'm going to say is that $10 to $9.85 is probably the key support. I'll be right back. Dow's up $1,035. S&P's of 152. Basil, Chapman, Tiger Conditions Hour.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So the question came up, where are the resistance levels? Where would you even think about shorting? I'm not thinking about shorting at all right now. But most importantly, what are we looking at? So I think over the next couple of days, we'll probably get a lot more news about the details. So far, this is a combination of new buying, but I really have to think that from the negativity I've read over the last week or two, that there's short covering, a lot of short covering. I mean, you can just imagine having to cover something that's up 4% from Friday, and you're waiting for the big dip. We got a little bit of a dip. Look at this. From the high today of 58.65.75 in the futures, it dipped down to 58 point. I mean, normally this would be huge. From that level down to 58.05. I mean, 60 points, that's usually a big deal. Not when you're traveling 158 points at a time. So all I can say is be careful. What are you going to gain from being short? Just a short-term trade? Maybe. At this particular point, there are too many buyers that have been left behind. I mean, even me. I mean, I'm watching this all the time. I just got stopped out of something, and there's nothing wrong with it. I just made it maybe a little too tight. Should have had a little bit more patience. Other things have done fantastically. I mean, we've got, in a short-term period, we've had some really big moves percentage-wise. But that's what I'm saying. So just be a little careful and be selective. The other thing I'd be looking at right here is, what did I say? I said... I didn't finish everything, so I needed to just real quickly. So by the end of the day, if by 3:30 the Dow has given back some, now it's only up 830. That's not that great. It needs to be up over 900 points to say, you know what, we're following through tomorrow just to really squeeze the shorts. But if we're only up 650 by the end of the day, it says, you know what, it's a one-off. Now you're going to treat it differently. So there are a lot of cross currents right now. I do like what I see. There's just no question about it. So LTBR, Lightbridge, by the end of May, it should